Well, Tesla's earnings were once again a little bit lackluster, but of course, Wall Street pulled a Wall Street and sent the stock up like they were incredible. Outside of the Tesla bull, I'm not sure anyone thought this earnings was unbelievable, blow it out of the water, the best ever. Now, to be upfront, it wasn't a disaster like the last couple of earnings calls were, but it wasn't necessarily good either. So the real question becomes, is this kind of a fake out rally and Wall Street's just going to beat us right back down and screw us again? And if so, is it prudent to go ahead and sell and then buy it back again whenever it inevitably falls lower? Or do you need to go all in because the Tesla train is ready to rocket once again, like some are saying? Well, let's discuss all this today in the fallout from earnings. And we have a special guest analyst who's going to give his take as well at the end of the show. Just make sure you like the video if you like getting the truth without the hype, because there has been a little bit of hype going on here after this earnings from what I've seen, from what's been sent to me. So you guys are going to get an honest take here and a true take and a take without the hype. All right, so we actually listened to the earnings call live in my group there, but we don't have it. It took a while, actually. It was a pretty long earnings call. Elon did his usual ramble a little bit more than what I like personally on an earnings call there. So it made the earnings call go a little bit longer. But nonetheless, we don't have an hour plus to get through all the details there. So what I'm going to do is I'm going to give you guys the 5 highlights that I have from the earnings call that kind of stuck out to me. And then we'll dive into the rest of should you sell or not? Is it going up? Price targets. And of course, our guest analyst as well. All right. So highlight number 1 is Nvidia's the big winner overall. Now look, I know this is a Tesla video, but Tesla brought it up, so we're going to talk about it because obviously Tesla is buying a ton, probably billions of dollars worth of Nvidia's chips. And oh, guess what? That's not the only earnings call that's been mentioned in. It's been mentioned in a lot of other earnings calls that, hey, we got to buy more Nvidia chips. We're buying as fast as we can. We're buying as many as they can pump out, which, you hear it one place, okay, but you start hearing it across all of big tech, all the big companies with billions of dollars of cash on the balance sheets. And you start to understand, wow, Nvidia has a really, really long way. Everybody thinking that they were dead at $300, $400, $500. Now we're up over $800. I don't know. All the big dogs of the big dogs are basically saying, for the rest of this year and into next year, they're going to be buying as many Nvidia chips as they can put out. So for me, this is one of those signs, although I know it's not Tesla related, even though Tesla discussed it specifically, but this is a sign that, hey, Nvidia, man, there's a lot more room to run with that stock if all these companies actually follow through with all the spend that they're going to do. Tesla clearly is one of the leaders in AI. Obviously, this earnings call kind of reiterated a lot of those reasons why we think that. But Nvidia, for the past year, and it looks like for the next year at least, is going to be the big winner overall in the AI race. So I just kind of wanted to bring that to you guys' attention. Highlight number 2, murkiness around the new models. Hey, Tesla said they're moving those new models up. They're moving it forward to 2025, which is great news. And it's something we absolutely wanted to hear, but they left it really, really murky and not necessarily in a good way as well. Now, let me kind of explain this all the way through. Obviously, they kind of gave their initial presentation there. Then an analyst asked a very good question. Hey, when we're looking at these new models, are these going to be refreshes? Are these going to be completely new models? And although I agree with Elon not giving details, he could have at least said something like, hey, we got something new coming for you guys, and it'll all be revealed here shortly. Or, no, these are just simply a refresh, but I'm really excited about them and can't wait to give you guys the details. But instead, we got Elon kind of dancing and going off on a tangent on something completely unrelated for 15 minutes, never really coming back and actually answering the question one way or another. Again, I understood why he didn't want to give details, but you got to learn to manage expectations in an earnings call. That is part of your job as a CEO, is to manage expectations, because Wall Street took it, and one of the big reasons for the bump was they think something new, and new models, it was plural, it had an S on the end. So in the release there, new models are coming. So they're expecting completely new models coming up here very, very shortly next year. So they kind of priced that in there, and hey, maybe that is what's coming, and that's awesome, and that's going to be great for us. But now with that being the expectation, if it comes in and it's just a refresh or maybe one new model and a bunch of refreshes of all the other models, then that right there is going to be a disappointment to Wall Street. And basically all the gains that we've gained from this and some of the momentum that maybe we've started with this will get taken back out of the stock. And that really sucks. I just felt like he could have gotten rid of all the murkiness, even if it is a refresh, basically saying it's a refresh. And at that stage, that's what everybody's expecting a year from now, is a refresh, and it's going to be exciting. And, or maybe that's part of the, robotaxi announcement. Who knows at this stage what's going to happen there? But I know that right there is the expectation, and now the expectation is a lot higher. Kind of like whenever he says something's coming next year, and then it comes next year and it doesn't happen, and then obviously analysts and everybody else are downgrading because, oh yeah, I know I said next year, but it's actually 3 years away. That's where kind of that frustration comes, where investors are kind of up and down, up and down, up and down, even though you may eventually hit the goal. The point being, you didn't do it in the time frame you said. And so that right there is kind of where investors get frustrated. And then unfortunately, whether we like it or not, they punish the stock for that. We can debate whether that's right or wrong all you want to. I'm not saying it is right. I'm just telling you the reality of what Wall Street's going to do, because he left it so murky, and they're just kind of left to kind of create whatever they want, because they're going to do whatever the heck they want to do. So if they want to trade the stock up, they're going to create a narrative that basically says, hey, stock's going up because of this crazy thing over here. And then when it doesn't meet this crazy thing over here, they're going to be disappointed and they're going to dump the stock. Again, we've seen this repeatedly with Tesla and with a lot of other stocks that we love in the stock market over the past few years. So I just wish you would have kind of cleared that up. Highlight number 3, Optimus is a long way off. Now, we knew, and we've talked about it before on this channel, it's going to be further off than everybody expects, definitely further off than what Elon has said. Obviously, he's already behind on his timelines with Optimus, because they're shooting big. They're going for something beyond just the normal standard robots that are in factories already. He wants more than just the robots that are already out there in Amazon's factory, for example, where they already have purpose-built robots in their factories, and they're expanding that. He wants something more than that, which I believe they can get there. But the problem is that the expectation kind of seems to lean towards, hey, it's coming, hey, it's close, hey, we're there. And then when you look into the details, talking about, hey, it might be able to do some limited task in a lab by the end of the year there in kind of a controlled environment, that's not anywhere near. That's not anywhere near close to completion or anything else of that nature. It's kind of like when FSD4 was released and it's right here. We're getting there fast. Well, I mean, how many years ago was that now? It's not. These things are hard and they're going to take time. And just think about these few little factors right here, just these few little factors. There's so much more to it than this, but just these few little factors that have to line up before we can even talk about anything of Optimus hitting the bottom line. I mean, just small amounts, not large amounts, not trillion-dollar amounts, just small amounts hitting the bottom line. These things all have to fall into place. You have to be fully ready to go, able to do everything that they say it's going to do, fully tested, and in the factories actually producing and kind of past that testing phase per se, that's going to happen within Tesla before they're ever able to actually expand that out into something that's actually going to create and generate huge bottom line revenue profits. So that's first piece. Second piece, you got to have a factory that can actually build these robots at scale. And then third, you've got to prove that you have actual demand for those robots after all those things have happened. And so you kind of start looking at those timelines. You kind of go, hey, you can't just do all that in 3 months. You can't do all that in 6 months. You can't do all that in a year, probably not even in 2 or 3 years. It's going to take more time than that in order to get this thing all the way to that point where we start seeing something that significantly impacts the bottom line. And so this earnings call was just another way that a lot of folks were getting excited about it. But when you actually leaned into what they said and you actually think about what all has to happen before we see huge bottom line profits on this, it's years away still. And that's just the reality of Optimus right now. Highlight number 4. Solar disappeared from the report. All right, once again, energy was the star of the earnings report, but mysteriously, solar kind of disappeared. I really, maybe I misread it, so please comment down below if it was some other place than it normally is. But I didn't see solar on there at all, which we've talked about before. I think they need to cut solar. Everything Elon does is not going to be perfect, not going to be great. I've tried to put Tesla roofs on my houses before. I own rental properties across the US, and it's absorbently expensive and not worth it. Just, I mean, shoot, I could put 3 lifetime roofs on for the cost of a Tesla roof. And the amount of savings in terms of energy bills and stuff like that, it paid for itself in 30 something years, but that's not worth it at that stage. So, I think it's just a product. Hey, they need to either cut or bring it down, revamp it, and then come back later on, whether it's a year, 2 years from now. But right now it's kind of a drag. And the fact that they didn't even break it out tells me that, that may actually be what's happening here, because they're, in a quarter where you needed as much positive news as possible. If solar was hugely positive, they would have put it in there, but instead they took it out. And highlight number 5, margins appear to have bottomed. This right here was the biggest takeaway for me from this earnings report. I know some of the other things we talked about were negative. At that stage, yeah, they are, but here's the important piece. This right here is the biggest piece right here. It appears as though margins have bottomed, because in a quarter where the numbers were, quite frankly, lackluster. Deliveries were lackluster. You had a lot of things. Cybertruck ramp still going hot and heavy. Obviously, that gets better each quarter as we move forward, but you're still taking a huge loss there on Cybertruck as they kind of, ramp the sucker up. We saw margins basically flat, which is big, big news for Tesla, especially given the fact that some of the cost-cutting measures that they've implemented Didn't count in this quarter either. They're going to count in the next quarter. So it's completely feasible that we have kind of seen the bottom in regards to margin erosion with Tesla, and we could see that improve on the next quarter. Now, I don't think it's going right back over 20% or 25%, none of those crazy projections that folks are putting out there and such in the quarter. It takes time to build those margins back up, especially with high interest rates and a lot of other things going on with the economy right now. It's just not going to happen. But it's good news to see that we may have bottomed. This right here may very well be the bottom on margins, not hopium, I think it is, but I'm able to look at some tangible things and say, okay, I can make a very reasonable case that this is the bottom for margins, which of course means it's going to be easier in the future to increase those EPS numbers to start see that getting back on track and moving in the right direction. But it is the key to turning around not just the company in terms of the financials. I'm not talking about in terms of execution or anything else like that. Remember, we had negative cash flow. I mean, we had some negatives this quarter as well. But it is the key to turning it around long term in regards to the stock price, because in the end, if you don't get EPS growing again, the stock is going to go nowhere. Matter of fact, it's probably going to trade down because that multiple is going to continue to kind of diminish, especially if we don't see significant growth ramp back up in regards to vehicle sales. So this right here was a good sign that, hey, even though we may not get the huge revenue growth that we want right now because of a lot of factors that are outside of Tesla's control, man, if you can start becoming more profitable in the meantime, it makes investors happy and it starts to move that price up. But despite all that, this looks very similar to a screw job that Wall Street might very well try to pull on this. We've seen it before. We've seen it over and over and over again, and the setup looks the same as it did before. Well, let's discuss selling first, and then we'll talk about where I see the share price actually going, and then of course our guest analyst as well. I only sell for two main reasons. There's other reasons as well, but these are the two main reasons that I look for every single time when I decide to sell a stock or not. Number one, fundamental changes in the business. I don't see anything here in this earnings that's a fundamental change. I don't count Robotaxi, anything that I do in terms of valuing the stock. I don't count FSD. I don't count Optimus. I don't count any of the things that I, kind of viewed as not necessarily the most positive thing in regards to Tesla. Matter of fact, energy, which, is growing and growing like gangbusters, if anything, is going to help out. And it continues to show it's resilient despite everything else going on with the vehicle side of things. So there's no fundamental changes there, and there's been no law changes or regulation changes or anything else like that. That would also point to a fundamental change in the business for Tesla. So for me right now, I don't see any fundamental change here, but there's still another reason why I sell as well. So let's talk about that one next. And the second reason is a massive hype run up. I think we can all agree, even though it was a nice bump up after earnings, this is not a hype run of any stretch. Tesla at $400 would be a hype run. Tesla where it's at right now, this is clearly not a hype run. So I'm not worried about that at all. I'm not caught up in something to where they pulled years of earnings forward. When you pull 10 years worth of earnings forward, it means you're going to trade flat or down for a period of 5, 6, 7, 8 years, or if you can grow the business in the meantime, it means you're going nowhere for a really, really long time. And in some cases, obviously we saw that in 2021 with all the penny stock hype. They're just trash companies to begin with. Man, they may have pulled out a lifetime's worth of earnings into the future there with some of those stock prices that we were seeing. So that right there clearly is not happening with Tesla. This clearly isn't a hype run. I understand some folks think it's severely overvalued. That's fine. I don't really think Wall Street settled quite yet on exactly how to value Tesla, but nonetheless, I can definitely say, and I think everybody would agree, it's not on a quote unquote hype run of any sort right now. So that's definitely for me not another reason to sell, which kind of leaves you in the opposite dilemma. Do you look to buy? When do you look to buy? So if neither one of those things happen, at that stage, you're probably looking at, hey, do I look to actually add to this stock given that we're not in one of those two scenarios? Now, obviously, if you're looking to just, sell now, buy later because you're playing those trading games or whatever, that's a totally different strategy there. You can do that if you want to. Buffett didn't do that. Peter Lynch didn't do that. I'm a long-term buy and hold investor. I don't do that. Just not one of those things. If you want to trade, great. You can do that. If Wall Street decides to beat us down, that's exactly when I feel the time is to add. That's what Buffett did when his stocks get beat down. That's what Peter Lynch did when his stocks get beat down. And sure, you can play those trading games, but traders typically don't even outperform dead people. They underperform the indexes. That's statistically true. So I don't see a point in doing it, but I understand some folks want to do it. Hey, that's great. That's not what I'm looking to do there. I personally want to beat dead people, so I'm going to use a little bit of a different strategy than that. So what does all this mean for the stock price? Well, I actually bought more just before earnings at 140, 169 because I just simply followed my plan with the stock. I kept it simple. No games, no nothing else like that. Obviously, we're up on those shares after this post-earnings bump, even though I'm not sure it will actually stay the entire time. And full members got to see those buys in real time. But for just $15, you can see if Tesla made it into my $250 portfolio challenge, where I'm basically taking $250 a week starting at zero and turning it into a six-figure portfolio and beyond. So you can see if Tesla is one of those stocks that fits into that category there. If you take advantage of the founders pricing for my group, which is actually already halfway sold, there's a limited amount of spots. We're more than halfway home on that. So make sure you jump in and get your spot before those completely sell out, or get your membership if you want to see all of my buys on Tesla real time. You want to watch the earnings calls with us in real time. You want my thoughts on Tesla. You want to see my complete watch list, complete with price targets for all stocks that I'm looking to buy right now, and so much more. Just make sure you check out the pinned comment. Take advantage of the sale for my group, or take advantage of the founders tier before both of those expire and the prices go up. Now, in regards to the share price, I'll be honest with you guys. I was not that impressed. I know a lot of other folks out there are very bullish on this earnings and everything else. I'm bullish from the standpoint I think it's the bottoming earnings in regards to the toughest quarters in regards to Tesla, but that also means that it was a bad quarter overall. It wasn't a great quarter by any stretch, and we are definitely not back to growth rates to justify a much higher price, especially with EPS eroding, because what it means is the valuation for Tesla actually went down. Tesla actually got more expensive after earnings than it did prior to earnings. Of course, part of that is the price bump, but part of it is also that EPS number really not going too well. And you kind of had the opposite with Meta there. You had EPS go up, but yet it got beaten down. They had great earnings, great everything. Wall Street didn't like guidance a little bit, and they beat it down. So you actually saw Meta actually kind of get cheaper, a lot cheaper, not just because the share price fell, but because the valuation actually went up as well at the same time. So you had share price going down, the valuation actually went up. And so that's kind of the opposite scenario, right? That's the perfect scenario. Hey, price goes down and the valuation actually went up. That's the exact scenario you want to look in, as opposed to Tesla kind of did the reverse there. The valuation went down, but yet the stock price went up. That does set us up for some games with Wall Street. Hopefully we just trade flat here, because I know a lot of folks, they've taken a beating in Tesla and they just want it to just kind of stabilize. If we can just kind of slowly start leveling up and start taking out resistance one level at a time there, that would be great. But it just doesn't seem like Tesla's going to move that way. So I do think we could be in for more of a flat, or maybe some down trading into the next earnings there. And of course, Elon can throw all this into whack with just one tweet or X. I don't even know what you call it when you post on X. I don't know. Anyway, I'm going to call it a tweet. One tweet can throw all this sort of stuff here in chaos. So for me, there was nothing tangible in these earnings that gave me the good feeling that, hey, there's a good sustainable run coming. Now, can it happen with Tesla? Absolutely it can, because Tesla runs for no reason. Just like Tesla sometimes craters for no reason. It makes no sense. It's the most volatile stock in the stock market today. So I think we trade flat for the next quarter or so. We'll see. Obviously, if I'm wrong, I'm happy. I bought prior to earnings there, so I'm very, very happy with everything that I bought. But nonetheless, that right there is kind of what I think we see. But let's bring in an analyst, our guest analyst here that we have on the channel from time to time, because he tends to have a little bit more of a bullish take than I have. So, I kind of have, if you want to call me the bear, I'm not the Gordon Johnson bear, obviously. He thinks I'm Gordon Johnson, but whatever. I'm not Gordon Johnson there. But nonetheless, I'm kind of giving you this side. I think he's going to give you the more bullish take on there. So let's bring him in, the Tesla bull.
Did I just hear that right? Nvidia is a winner?
Only losers pick stocks like Nvidia, which completely blows chunks of pig goblins and will never make anyone rich.
Who cares if it returned over 100,000% since IPO? I'm looking for real gains. I'm not looking for that fat guy at the gym sucking in his gut to try to look buff. That's Nvidia for you. Just sucking in the gut, as opposed to Tesla, which looks like a Greek god and doesn't suck jack. Here's the actual truth of what I heard on the earnings. Cybertruck, 1 million sold next quarter. Optimus will be in every house by the end of 2025, including Luke's, and the entire world will have Tesla Solar by the end of the year, and Tesla will be worth $1 trillion per share, because I'm the Tesla ball. I'm the Tesla ball. I'm the Tesla ball.